Building a portfolio with Fidelity Basket Portfolios is kind of like making a sandwich. It's as simple as picking your stocks and ETFs, sort of like your meats and other topics, and managing it as one big, juicy investment. Now that's pretty good. Learn more at fidelity.com/baskets. Investing involves risk, including risk of loss. Fidelity Brokerage Services, LLC. Member NYSE SIPC.
Hello and welcome to Fintech Insider Insights. I'm Benjamin Ensor here at 11FS. On this week's episode of Fintech Insider, in partnership with Skaleet, we're taking a deep dive into the unbundling and rebundling of financial services. Now, you've probably heard the terms thrown around, but what does unbundling really mean? Is it just a flashy way of saying financial services firms are breaking up their services? Or is it part of a deeper transformation in how financial institutions operate, innovate, and serve all of us? And if firms get this right, how will financial services look different by 2030? To help find out, we are joined by three fabulous guests. First of all, we have Martin Della Chiesa, Chief Executive of Skaleet. Welcome to the show, Martin. Please could I ask you to introduce yourself and Skaleet to our listeners?
Thank you, Benjamin. Thank you for having me. Very happy to be there. So I am indeed the CEO of Skaleet. I have a background in consulting as well as investing, mostly focused on software, B2B software across America and Europe, before becoming an operator and a CEO at Skaleet. At Skaleet, we are a next-gen core banking platform, meaning that we provide the technological backbone to 30 financial institutions across Europe and Africa in order for them to either start new activities in months instead of years or transform the entire bank, financial institution or business units for the better.
Fantastic. Thank you and welcome. We're also delighted to welcome Christian Rao, Senior Vice President of Global Partnerships, Crypto, Digital Assets and Fintech at MasterCard. Thank you, Christian, for joining us. Now, MasterCard's probably familiar to pretty much all of our listeners, but perhaps you can tell your listeners a little bit about you and what you do at MasterCard.
Thanks for having me, Benjamin. Pleasure to be here. My name is Christian. As you said, I've been with MasterCard in different functions for over 13 years. I started out in business development, then was heading core product management for Central Europe. Then I was general manager for MasterCard in Austria. Then headed crypto, blockchain, digital asset, and fintech go-to-market in Europe, and then evolved in a global role, having the sort of same remit in terms of customers, because we really felt that our world does not stop in Portugal and Poland, because our customers basically want to have a one-stop shop from Singapore to San Francisco, essentially. And that's what I'm doing.
Fantastic. Welcome. And I'm also delighted to welcome Emilia Bayer, Senior Sales and Strategy Lead at Prima. It's really great to have you with us, Emilia. Can you too tell us a little bit about yourself and a little bit about Prima?
Thanks for having me, Benjamin. Really excited to be here. I'm Emilia Bayer. I lead growth strategy at Prima. And for those who don't know, Prima is a unified payments infrastructure. Essentially, we're an operating system that brings payments, fraud prevention, and commerce services all under one roof. And in my role in particular, I work with startups and hyper-growth businesses who are often held back by fragmented stacks, increased complexity, and rising costs. So my mission is to help these types of merchants navigate that type of payment complexity and build a more resilient, scalable, and flexible infrastructure that can power their growth.
Fantastic. Welcome. Okay, well, let's dive into the unbundling and rebundling of financial services. Now, why don't we start with a little bit of a definition? Let's try and clear out some of the jargon. Perhaps I can get a couple of sentences on what bundling and unbundling are in a financial services context. Martin, perhaps I can come to you first. I mean, Amelia just talked about having everything under one roof. That sounds like bundling to me, but can you describe how you see bundling and unbundling?
Yeah, so I think to me the starting point is the bundle state. So I think like since the 60s, whenever let's say IT started to exist within banking, so moving from paper-based banking to a form of electronic-based banking, if not digital, uh, the whole banking machinery was bundled from a distribution standpoint, meaning the model of the universal bank, selling all kind of products to all kind of customers. One thing. Second thing, in terms of the value chain, uh, you are a bank. Basically, when you are a bank, you do three things. You manage IT, you manage distribution, i.e. branches historically, and you manage regulatory and the balance sheet, so asset liability management. Those are the three activities that you are doing when you are a bank. And so therefore, until probably, I would say to me the date 2015 or maybe 2018, even in Europe with the DSP2, the financial services space, in particular with regards to the retail banking space, was bundled, meaning that a very few players were serving a whole bunch of markets with an end-to-end integrated value chain. So we are starting from a bundled situation, from a technological standpoint, as well as from an operational standpoint and from a distribution standpoint. And we've been moving to an unbundling phenomenon that is driven by a couple of things. The first one, which is that it is now doable to unbundle from a distribution standpoint and from a technological standpoint. It is doable from a regulatory standpoint. That's one thing. It was not allowed to break down the value chain really from a financial services standpoint. Now it is, since 2018, probably. And secondly, it is doable technologically throughout mostly API and open architecture that enable the stitching between systems to become much easier. And therefore, a lot of players have emerged to become point solution and becoming very good at doing simple things instead of being average as doing a lot of things. So that's to me the unbundling phase. And now what I see is more like a Lego game where the demand is driving a bit of a rebundling kind of phenomenon, where whether at the same time, I believe the unbundling is a necessity and direction of travel, but then it's confronted to the reality, which is that if left completely uncontrolled, without any services, without any expertise, the unbundling phenomenon, which is direction of travel, becomes unviable or in a way undoable. And I think what we are all doing there, what was MasterCard's strategy, I don't want to speak for Christian, but we are working to facilitate the unbundling phase by a form of rebundling and combining the best of both worlds. That's my take.
Thank you. Amelia, do you agree with sort of Martin's definitions and descriptions? And if so, what are some of the advantages of unbundling? Why does unbundling happen?
Yeah, I completely agree with that. And I think it does come with its own benefits, right? So I think we're at a time where customers can actually choose the best provider for each particular individual, either business operation or an entity or a function. So for example, when we're talking about banking, you might choose to outsource your FX foreign exchange to one provider, whereas use another provider for fraud prevention. And I think the best part of that is that you can really construct a modular stack by using best-in-class providers. You can really add value to your operations. And I guess at Prima, we see, our merchants apply very similar logic. Although we only work across payments, but we're seeing a massive trend of our customers looking to decouple their payment processes, PSPs, and use other payment adjacent providers to enrich their stack. And the benefits of that are very different. So some people might be looking to increase their authorization. Other merchants might be looking to reduce fraud or optimize for customer experience. So you can really pick and choose the best vendors for particular needs that your business requires. And I guess for me, the modular mindset is how modern companies win these days.
Indeed. Christian, I'd love to bring you in. Obviously, at Mastercard, you not only see things sort of globally, but you also work with all sorts of customers, all different shapes and sizes. I always like to bring things back to the customer and kind of start with the customer. Are we seeing different patterns in sort of business to consumer and business to business? I mean, Amelia was just sort of talking about merchants and so on, but are you seeing maybe different things happening with consumers compared with large corporations in terms of their sort of enthusiasm for bundled or unbundled financial services?
I think we do. And I've heard a term that I like to pick up later that Emilia just floated, modularization. Maybe modularization is sort of the healthy middle ground between bundling and unbundling. But not jumping ahead of ourselves here, Benjamin. I definitely see that. For us, it became very apparent that there is a bit of unbundling going on when the first wave of fintech started. Consumer fintechs, we would now call them mobile first current account light propositions. I'm just throwing out illustrative names: Revolut, N26, Monzo, and so on and so forth. Interestingly, they unbundled the service from a consumer perspective. It was very stripped down, right? A prepaid card. Today we would call it a prepaid card. Other people would call it a debit account without overdraft capacity. So very stripped down, but highly bundled, because they would typically start with something that we would call a BIN sponsor, somebody that gives them just a white label banking capability, and they just would put their Revolut stamp, their N26 brand on that. So in that sense, from a consumer perspective, highly unbundled, because I couldn't do real estate mortgage financing. I couldn't do, savings account, nothing essentially, but very vertically integrated from a value proposition. And now fast forward a couple of years or a decade and a half, these players have basically bundled to a certain extent that they build certain parts of their value chain themselves, partner with best in class, just saying, N26, for example, when it comes to crypto, they partner with Bitpanda, and there's tons of example around fraud and whatnot. And they have almost rebundled from a consumer perspective to the extent that Revolut is now saying, okay, you can also do mortgages, and we offer, short-term money market deposits, and we also branch out into corporate banking. Having said that, and I cognizant that I touched on a couple of dimensions, I think it's really a dynamic process. And that's what we see in the industry. And that's what excites us, because we see that, as in many aspects, it's a pendulum swimming: bundling, unbundling, integration, non-integration. I think it is important that there's a sort of fertile breeding ground for innovation to happen. And I think quite likely, and that's what Martin spoke to, a lot of innovation happens if you move away from the trodden path. And I fully agree. If there wasn't, all the IT innovation, and then also, let's call it regulatory innovation, that would allow this unbundling of a bank, we wouldn't be where we are today, right? That's a long answer to a very simple question, Benjamin.
I think, sorry to jump in, but in my mind, there are, to Christian's points, there are really two things that I believe are really interesting too. Is that Revolut, for instance, to take that example, they are bundling even beyond what retail banks have ever bundled.
Mm-hmm.
So going into even like the telco market. So the ultimate view of the rebundling or extra bundling, if you will, is a kind of a super app vision, as it happened in Asia way before. So they go even beyond. It's not even rebundling. It's like bundling to the extreme in a way that was never done before. I think that's one aspect. And the second aspect, which I think is extremely important, is that in my mind, there are really two levels in terms of unbundling, rebundling. There is the bundling or unbundling of services from a B2B or B2C but end user standpoint. So in a way, Revolut is bundling as much as they can as a one-stop shop, but everything that's behind it from a value chain standpoint can be modular, a bit unbundled and a bit bundled. There are things they control, there are things they outsource, there are things they combine. And I think that's really what makes the whole landscape extremely interesting from an unbundling, bundling perspective, is that you can provide customers a one-stop shop proposition while leveraging best-of-breed solutions that are stitched together in the background. And this is what makes the ultimate customer experience probably superior, because you're able to combine best-of-breed kind of approaches. So I think there are really like two levels in the value chain, on the distribution side and as well on the IT or regulatory side, where you don't have to necessarily integrate fully. It's not because you are bundled in the background that you have to be on the front side. And I think that's decoupling between the factory, if you will, and the distribution shop, what the shops look like, is extremely interesting as well.
And to pick that up, and I think what Martin just mentioned is extremely important, because if there was not the opportunity to technically unbundle, you wouldn't have the option, right?
Exactly.
And I think today, fintechs of all sizes and wherever they are in the maturity journey, they can make a choice, a deliberate choice, say, this is my core competency. I want to in-house this capability. This I just get from the market because I know I can't build it cheaper and better than I get it in the market. But again, this question you can only ask if you have the capability to slice and dice and build this modularity.
So, Emilia, I want to come back to this, the modularity point, but just before we get to that, the bundling versus unbundling, in essence, unbundling is to some extent what someone else does to you. Unbundling is something that you as a company do with your products and services that to some extent most companies want to try and bundle services together in order to sell more to their existing customers, whoever those customers might be. And unbundling is where someone else comes in and attacks your market share by saying, hey, well, we can do that particular slice of it better. Are there ever scenarios where companies are sort of deliberately unbundling their own services, maybe to create the kind of modularity that we've started to talk about? Or is it really just bundling is something you do and unbundling is something that is done to you?
Really good point, and an interesting question, actually. I think kind of can go both ways. I mean, we've seen a lot of mergers and acquisitions, right, where perhaps companies decide to invest into service because they have conviction, and then they test it on the market and they realize it doesn't work. So it does make sense to kind of like to unbundle and focus the business on something that actually does make sense to that customer. I think, to me, the fundamental question is what type of value you're driving and for whom. So whether you're building a product or whether you're building a fully fledged bank, I think really understanding what makes sense for your customer. And, I think Revolut, we've spoken about Revolut quite a bit. I think they're really good at doing that because ultimately they run experiments, right, alongside their core business. So that allows them to unbundle and rebundle parts of their operation. So they might run an experiment. They might decide, no, actually, this isn't going to work in this particular market. So they might just offload that entire product. And then perhaps, I don't know, I've never worked at Revolut, so I can't comment, but perhaps even resell it onto other players in the market who might be in the market for that particular product. I think it really depends. I think both strategies are valid. It just really depends who you're trying to serve and why you're building that particular service.
Thank you.
I think, Benjamin, to that same idea that has been touched upon by Emilia, if we take the example of the traditional bank strategies across Europe that I've been observing internally first, then as a strategy consultant, and more recently as a software provider, I think as a CEO of a bank today, you kind of must drive some form of self-inflicted unbundling for two reasons. The first one is probably defensive, in a way that if you don't unbundle yourself by bringing to market a different proposition, for instance, with regards to SME banking, you are really at risk to face market share reduction towards Revolut Business, towards Conto in France and in Europe. So you need to be mindful of cannibalization phenomenon, but it's a defensive play. So if you don't do it to yourself, somebody else will. I think that's the first part. And secondly, from a more of an aggressive, attacking strategy, you can benefit also of the unbundling phenomenon that is driven by regulatory changes as well as technological perspectives. You can offer a bank as a service type of proposition as a bank. This is something we've done very early on in 2018 with La Banque Postale in France, where very early on they saw an opportunity for themselves to launch a bank as a service type of proposition, to manufacture products that they can distribute within the banks, as well as serve third parties with their own tech platform and operational platforms. So I think it's both a mitigation play as well as an attack kind of strategy play that I believe is a necessity, at least from a bank strategy standpoint, in the coming month.
Christian, I had a question for you, and I realized you wanted to build on it.
If you allow to kind of what Martin was saying and connecting it to what you were mentioning, Benjamin, I think the notion of unbundling is something that is forced on you. I guess I would agree when it comes to the consumer or to business perspective, right? When very juicy pieces of your business are carved out and taken over by specialty providers. But getting back to the point that Martin was making, if you're sitting on it, and I'm exaggerating to make a point, on a monolithic 1960s IT infrastructure on a bank that has everything from consumer to corporate lending on it, if you don't unbundle this and you do speedboats or islands of innovation or whatever you want to call it, carve out these things, quite likely you're doomed to do nothing, because just, switching the entire apparatus is like open heart surgery. And nobody, in their sane mind would just take an entire bank and put it on a new platform, right? So this, you can call it progressive modernization or whatever you will call it, maybe even unbundling from a technical perspective, to build these speedboats to see, does that work? First, I put a certain part of my business on it. Once the platform has proven its merit, I can load more on it, and so on and so forth. That's just a thought I wanted to throw in there.
I wanted to ask you a question, Christian, about just whether we could use MasterCard as an example, because obviously people tend to think of MasterCard as a payments network, and of course you are a payments network and as a card network in particular, but also MasterCard provides all sorts of other services. And is MasterCard itself an example of a company that actually has deliberately unbundled a variety of services, that there are a variety of services that MasterCard has that customers can buy individually, whether it's, identity verification or authentication, all sorts of, in effect, MasterCard has started doing that kind of modular approach that, Emilia, you were talking about. Am I fair to point to MasterCard as an example of a company that has unbundled a number of its services? I don't have to get everything from MasterCard, right?
I think first and foremost, I would say we are an unbundled business model because we have four-party scheme, just to state the obvious, right?
Yeah,
Benjamin,
exactly.
you don't have a MasterCard card. You have a, HSBC, NetWest, whatever card. A bundled model would be you have an Amex card, then you have an Amex card proper. So I would say in that degree, we're a network that relies on rules, regulation, technical standards, dispute resolution, global interoperability, but is very unbundled in the sense that we partner with 23,000 something banks, have 150 million acceptance locations. So it's a network that really relies on driving innovation in this way, because we are not the best to decide what a corporate card proposition looks like or youth debit card or whatever. We leave that to all the banks and fintechs. So in that regard, we are unbundled almost per business model. On the other hand, we obviously see that while you have, very big banks in France, the UK, wherever in the world, quite likely few players in the world see as many transactions as we see on a global scale. So we would see certain elements of fraud or other sort of misbehavior in the system earlier and can detect it easier than others. So I think in this sense, it makes sense that we bundle or enrich, we would call it enrich value-added services to our basic network services, which you could strip down to authorization, clearing, and settlement. But nowadays, there's so much more, like you alluded to fraud management, all these kind of things where also our customers say, MasterCard, we see value in you providing this. And again, it's about optionality and choice. Quite likely, for a lot of our services, almost all, I would assume, that we provide, you can find another vendor. And then it's, for the companies out there that innovate and try to build the best consumer business value proposition, say we partner with MasterCard, we do ourselves, but we're keen to have that choice and optionality in our ecosystem.
Emilia, what does this kind of modularity look like in practice as you try to sort of tie together different providers to provide a coherent experience to an end client? How do you do that? How do you manage that as a business?
I mean, essentially, speaking of the end client, right? So the whole experience almost needs to be unnoticeable, right? And that's when you're doing it right. And, the whole experience is basically based on a few very simple pillars. You have to find partners that are API fast, that are pluggable, that have that scalability in mind, that are global from the get-go to allow you to grow with your business, right? Needs. And ultimately, you need to ensure that they are replaceable and upgradable in a way. Whichever service you use, you need to ensure that they integrate in a way that they don't affect the rest of your ecosystem. And also, I think for me, it's not so much about choosing the partners or vendors and plugging them in. It's almost having that orchestration layer that can bring everything together and help interoperate them harmoniously. So I'm going to give you a very simple example, right? As consumers, we all have smartphones. And our smartphones have loads of different apps. I'm sure our phone providers have loads of different partnerships that operate those phones under the hood. But as consumers, we don't notice that. And that's the beauty of having all of these different vendors coming together and building something remarkable that hopefully elevates and improves the end customer's life and lifestyle.
Lovely. Martin, last quick question in this first section. Can you tell us a little bit how you at Skaleet are sort of helping unbundle services and try to create more modular approaches? Can you give us a sort of example of the ways in which you're working with clients to unbundle certain services?
Yes, absolutely. So I think so. If you take the perspective of our buyers, which are from B2B standpoint, so they can be banks, fintechs, PSPs, any types of financial services institutions. I think the way we are part of an unbundling wave, if you will, is that we redefine what a core banking is in a way. So the mirror of what I talked about earlier with regards to the bundle value chain of a bank, the mirror of that from a technological perspective, meaning from a core banking perspective, was that the historical providers were selling not even bundled solutions, but monolithic solutions, monolithic products with front-to-back systems and services coupled with a software editor activity, as well as a very wide range of products and services, including anti-money laundering, including CRM in a way, including accounting, including payments, including deposits, including lending. And so essentially what we are doing is when we talk to our customers, we say, hey, you are not going to buy core banking as you did. You are going to decouple the boxes that you are going to buy from different people. The reason for that is that it's very hard to be good at everything. First reason. Second reason is that you don't want to be too much dependent on a single player for a variety of very legitimate reasons. Thirdly, as Christian was saying earlier, probably there are some bricks that you want to have control over. So it's not a yes or no kind of decision. It's more of a hybrid or a buy and build kind of strategy where there are some bricks you are going to build yourselves. There are some bricks you are going to buy from us or from somebody else. So we define the definition of core banking, and therefore the need of the customer in a way from a functionality standpoint is still intact. So our customers, whether they are banks or fintechs, they still need to do anti-money laundering. Okay, they still need to have a CRM. They still need to connect to a lead bank to connect to the SEPA rails. They still need to do that. So for us, that's where I come to the rebundling part. We are building a network of providers and an ecosystem of partners. And some of them we are already stitched to. And we have connectivity layers to a whole bunch of service providers around us. And this is what we orchestrate into a nice music for the customers to be able to pick and choose if they want to. And at the same time, to pave the way to success in a way that is executable and not having to figure out like, okay, so who should I work with? Do I end up like calling 10 AML companies, 10 CRM companies, 10 SEPA lead bank? Do I have to figure out like the budget for stitching between the whole thing? I don't know how to do that. I'd rather stay with what I have. I understand the full cloud modernization, the whole thing. I understand where we are going. I don't know how to go there. I understand modularity. I don't know how to do it. And therefore, I stick to where I am, meaning the bundled historical world. So the whole strategy that we have from a solutioning standpoint is really to make a modular approach accessible by paving the way to success, by pre-setting the key areas of needs that our customers and prospects demand. And this is why we partner with companies like MasterCard, Comply Advantage, because we go and we try to package. So we don't resell third-party solution, but we package it, we pre-connect it, and we show our customers how. So that's the two movements. Unbundle it, and second, rebundle so that it is achievable in the end.
Fantastic. Let's take a quick break here, and then we will be back very shortly.
Whatever the occasion, effortless elegance is right this way. Because Hilton brings you new ways to stay courtesy of the Nomad London. And it doesn't stop at award-winning dining in a space draped in velvet and illuminated by vintage chandeliers. No, this day goes beyond with unparalleled personalized service and attentive hospitality. Oh, and did we mention the Nomad London can be booked using your Hilton Honors points at Hilton.com? Hilton, for the stay.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Welcome back to Fintech Insider Insights, where we're talking about the unbundling and rebundling of financial services. Now, it's quite an interesting concept because as we've been talking, we're talking about the unbundling, and yet at the same time, we've got rebundling. And you could say, well, what's the point of this? Christian, I mean, when we sort of unbundle a traditional bank and then we rebundle things, how is that creating more value for a customer? If that customer is a consumer or a small business owner and so on, how are those rebundled services maybe more relevant or more effective for that customer?
Maybe it's an oversimplification, but I think previous bundling was supplier-centric or sort of introvert centric. Like I'm a bank, I own the bank branch, I own the core banking, I own, it's just like, how do I need to structure myself to provide the services that I want? And I think we spoke about, or we mentioned the name Conto in the process is what I find interesting. If I'm like a small proprietary, have an SME business that I run, I'm not interested in that my bank can do everything from corporate investment banking to consumer banking. I just want the best in class for SME banking, right? So I think what this unbundling and this sort of old vertical of financial services allows is a sort of user-centric bundling of integrating basic banking functionalities, card functionalities, cash flow prediction, bookkeeping, integrating with tax authorities, all of these things. And this is for me an example of unbundling, a sort of introvert vertical structure to allow for horizontal integration to basically provide a end-to-end solution for an SME, for a consumer, for a corporate, whatever it may be.
Such as all of the sort of so-called vertical software as a service providers that specialize in serving businesses in particular sectors. And I realize this is a slightly awkward juxtaposition of a vertical with what you're horizontal, but it's the same point, isn't it? It's about rebundling services around the customer.
And I think this is what Martin spoke to and where they excel, where they say, okay, we do what we do really, really well, but we are open to partner and be very sort of connectable to other best-in-class providers.
So, Emilia, how important then do partnerships become? Because, we see many other industries that partnerships are crucial. You look at the tech industry, media, sports, etc. But actually, in fact, you look at a lot of sectors in financial services. You look at insurance, you look at investment management, you look at payments. Partnerships have always been crucial in those sectors. It's only really banking that's been a little bit special and a little bit sort of standoffish. Do we think, are banks just going to have to get better at partnerships, or are there still sort of some regulatory things that just mean that that's not quite true?
Yeah, really good question, actually. And I think, just to follow on from Christian's point, I think banks are no longer competing against other banks, right? So they're competing essentially against software companies. And I think that's a massive difference because I guess like the battlefields don't happen in bank branches, they happen behind personal screens. And I think for me, and I'm a huge advocate for partnerships, smart partnerships. I think they're crucial because you can't be really good at everything. That's just how it is. I think we're seeing a lot of incredibly smart, 10 people founded disruptor companies who are really good at delivering the best-in-class service to those particular niches. And they have the scalability, they're incredibly nimble, so they can innovate at pace. And they tend to be incredibly customer-centric. So I think, from my point of view, the successful partnerships come from synergies, right? So if you're looking to tap into a particular segment of customers, or if you want to elevate your experience for those particular customers, you have to find those companies that are gonna, wave the flag for you and almost become an extension of your company or your bank.
So is there a risk at some point that as companies sort of stitch together multiple services, you can end up with sort of inconsistent or broken customer experiences because something sort of goes wrong somewhere in the process? Maybe Martin, maybe I can bring you in on this one. I mean, as companies are sort of bundling services together, to Emilia's point, finding best of breed partners and so on, how do you sort of manage the risk that something goes wrong? Customers are unhappy, customers don't know who to blame. How does that work as we unbundle and rebundle services?
Yeah, look, I think this is a very valid point where I think we all should, and I think in particular I am, be quite humble about that, because my personal view is that we are still learning how to stitch together in mission critical environments different pieces of software. So yes, we know how to do it. API management and the modernization of technologies made it much simpler to do it. So cost of integration is dropping massively. So the issue is not to connect. The issue is to maintain the connectivity over time, to maintain it and to evolve it, and to evolve it in a way that will be completely abstracted away from the end customers. And that's easier said than done. There is a lot of effort, a lot of engineering effort that has to be poured into combining expertise from the different companies, making sure that the testing is done properly, making sure that the relationship between companies exists. It's not only about building an API or about doing an integration between Skaleet, Comply Advantage, or whoever. It's about building relationships between the management teams of those companies to make sure that whatever happens, like an API is being changed or the business model is moving, a new product is being built, there is a rewrite of software, whatever that may be, so that the teams can work on it to make sure that the end customer is not going to see anything. And I think that's made even more important as well as challenging in a world where we are all shipping a lot. We are all, I think, in the SaaS world, working in a continuous delivery, if not a continuous deployment mode. So we are shipping versions of our software depending on the providers every 2 months, every week, every 2 weeks, every sprint, sometimes even every day. And so the whole thing is moving. And while it's moving, it needs to look stable and it needs to be stable. So I think there is a risk that if not done properly, the customer experience in the end could suffer from some providers taking those kind of challenges a bit lightly. So I think, if I give you an example from the way we work internally, the connectors we have with our partners, we treat them as product assets. So they are part of our product. They are allocated to domain-driven squads. We make sure that we have the right product owners in front of us with our different, let's say, partners. So organizationally speaking, that's something that needs to be considered. It cannot be aftermath. It needs to be strategized. It needs to be taken into account. It needs to be included in the technological roadmap, as well, for it to be well-oiled over time.
It's a very different way of organizing, isn't it? Christian, perhaps you can just help our listeners just by sharing an example or two where companies that have sort of unbundled and rebundled services are managing to create and deliver much more value than they could alone. Can you think of any, or can you share any examples of how this unbundling and rebundling is really benefiting? You've already mentioned Quanto and a few other examples in passing. Are there any others that sort of spring to mind?
I think we touched up on some of the typical, consumer to consumer fintechs. Onto is definitely a very interesting one. I also see quite a lot of money movement, cross-border payment companies where, previously it was extremely expensive to move money from the US to Europe. That would be very difficult. Today, I can just sit on my couch, I download an app, I tick 3 boxes saying I'm really not a US citizen, I'm not tax liable there. I can create an IBAN in the US from my couch before I had taken a picture, of my ID, did a bit of a selfie video. So here we see, that frictionless KYC comes into play. Of course, for this fintech that would do this cross-border payment, that they would have a banking partner in the US. They don't do that themselves. So there's so many things there. Then you have all these Robinhood scalable capitals of the world where, investment for consumers feels a bit like it's an app experience now. It's a bit like Spotify and Netflix, for better or worse. So that helps I mean, the entire investment industry, ETF, what ETF has done to active asset management, I mean, that's not something that we typically work on, where I would say, it's basically everybody can sort of unbundle their own investment. And so I think there's so many experiences, and quite likely on my personal banking experience is best reflected if you look at that folder on my iPhone start screen where it says financial services, and then you have quite 7, 8 apps in there that I just look in there. This is my personal financial cockpit that I built on my iPhone and bundled there.
Yeah, personally rebundling. Okay, so how does this change financial services over the next few years? So we're coming up to time. So I want to ask all three of you, how does this unbundling and rebundling change financial services, hopefully for the better, over the next few years? Amelia, perhaps come to you first. How do you see this unbundling and rebundling sort of changing the industry over the next few years?
I think we're going to see tremendous shifts. I think we can learn from other emerging markets like Africa or China, where financial services have become embedded in kind of all sorts of things. Telco, you've got commerce as well. And I think what we're going to see this fusion between, customers shouldn't have 10,000 apps to manage their banking products, right? Perhaps we're not probably going to get to the super app status due to regulated compliance and other things that we have in Europe, which are great. But I genuinely think it's going to be interwoven into people's life. Everything's going to become a lot more frictionless, or at least it should be. And ultimately, to be really honest, I don't think clients really care who provides their service under the hood. All they care about is the seamless experience. And, from my point of view, you can absolutely outsource all of these different components, but you can't outsource your credibility. So I think by unbundling and perhaps allowing best-in-breed providers to deliver those services for you, you can then focus on building that customer trust, loyalty, and credibility, which are crucial at this stage in time.
Fantastic. Thank you. Martin, how about you? How do you think the industry is going to get changed over the next 5 years by unbundling and rebundling?
Well, I think there is one important aspect that we touched on, but maybe not at this level of, let's say, conceptual threat for the players that are in place, which is that Africa is a bit different. As Emilia was saying, there is growth, there is market growth from a demographic standpoint, from an economic standpoint. The banking access penetration rate is still low, so there is room to grow for pretty much everybody. I think there is something that is really interesting in Europe, is that the financial services market, in particular the payments and the retail banking space, is extremely mature. And the shock that disruptors are inflicting to the space is mostly a deflationary shock. So the prices are going to go down. The prices of financial services, as they are more embedded, more bundled into additional services, the raw price of financial services and retail banking is going to go down. And therefore, the global market size is going to be, in my mind, stable, if not shrinking to an extreme. So it means that a lot of value will shift from certain categories of providers to others. So I think in a pretty flat-ish end market, the impact of the landscape transformation will be pretty massive, because it will drive, I believe, growing amount of value that will be moved from one category to another. So I think that's the one aspect. And the second aspect is probably that the banks, to a point that Christian raised earlier, which is probably my bread and butter, if you will, they will have to move at a pace that is far away from the one they are moving today from a technological transformation standpoint. Because given the IT stacks that they have today, the whole optionality from a strategy standpoint is not even a question. Like, you can debate about strategy all day long if you want, but you are prisoner of your own tech stack. And I think that we are going to see much more disruptive strategies for banks by necessity. And when I am asked by customers, how do I transform? My answer is always, you need to get started. So paradoxically, the best way to start transforming is to start something new, to Christian's point. Because if you think about the overall transformation, in reality, you are not going to do anything for the right reasons. So that's the Christensen description point. You can't take that kind of a risk. So the best way to transform the whole thing is to start small with adjacencies.
Indeed. Thank you. And Christian, how do you think the industry is going to get changed?
The world will continue to digitize. It will affect banking like it continues to affect retail, media, music, and so on and so forth. Having said that, the vertically integrated bank, at least while I'm still alive, I don't think will go away. So I think that will stay. That will continue to stay, but I think it will be sort of diminishing relevance because the young generation, like my daughter, she's 14. She's never set foot in a bank, right? But she uses a lot of financial services. And then I would want to pick up the thought of Martin, but I would give it a positive twist and not say you're the prisoner of your tech stack. I would say you need to be able to self-determine on whether you bundle or unbundle. And only if you control this, you're the master of your own destiny. And then you can be deliberate and say, I built this, I partner here, I outsource that. And I think this is really something where I think the industry will be headed, because some people say banks are just an IT company with a license. So you need to be ready for that world.
Nice. That's a great way to wrap up the discussion. Be the master of your own destiny. Thank you all so much for joining me. It's been an absolutely fabulous discussion. I wish we'd had more time. Where can people find out a little bit more about each of you and your companies? Emilia, where can people find out more about you and about Primer?
Feel free to connect with you on LinkedIn. It's Emilia B, and you can search me out by Emilia Primer. And we've also launched our Primer for Growth offering, which I'm really excited about. So you can find out more about it on primer.io.
Thank you. Christian, where can people find out more about you and the work you're doing at MasterCard?
I'm personally on LinkedIn, so you find me there. And then if you're a fintech, wherever in the world, in Europe or elsewhere, write to me, and quite likely I'll find a suitable person in MasterCard to direct you to.
Fantastic. And Martin, where can people find out more about you and more about Skaleet?
Same thing. Happy to connect on LinkedIn, and for the company, Skaleet.com. Very easy to find on Google.
Wonderful. Well, thank you all so much again. You can find me, Benjamin Ensor, also on LinkedIn. Thank you for listening. If you like what you've heard, please do follow our podcast, leave us a review, or recommend us to friends you know in fintech who haven't come across us yet. If you want to join the conversation, seek us on social media. Just search for 11FS or Fintech Insider. Thank you all so much, and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks, like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.